Let me start with a big global picture. We had our spring membership meetings in Tokyo 2 weeks ago today. I went then to the G20 meeting in Fukuoka, where I was able to speak to the central bank and finance ministers there. John, I was at your conference yesterday in Paris, and all three of those cities, the number one topic was concerns about the global trade agenda, trade tensions, U.S.-China, potentially U.S.-Europe, U.S.-Japan, U.S. You get the message. So why don't we start with a global perspective, because certainly at the polling that we've done earlier this morning, you, the crowd, have noted that global trade tensions are your number one concern. So why don't we start with the audience and ask, is that your concern? And if so, how are you preparing for it? I'm going to start with ladies first, and we'll work our way down the row. Charlotte?
So the way we look at the playing out of the global economy is very much through the eyes of the consumer, because that's the data that we are much privy to than many other people. I think we see continued growth. What you do see, rather interestingly, is different patterns of travel and trade. So, the geopolitics actually does play out both in consumer sentiment, but also where they choose to go. Interestingly, you're seeing perhaps the debate in China around education for Chinese students, and maybe it not taking place in the US. And you can see that actually playing out in some of the travel. If you turn a little bit to Europe, consumer spend has been, I think, remarkably stable and robust over the last period, whichever country around Europe you look at. What you also see there was a real shift from the physical world to the digital world. So whilst in aggregate I can see that consumer spend is continuing to grow steadily, some countries more than others, certainly not in the UK right now, you see a continued shift from the physical world to the online world. And that, I think, will continue to have ramifications through the economy as well.
We're going to get to the digital world in just a moment, where you guys are certainly industry leaders. John, you have a global business. You spend a tremendous amount of your time traveling around the world. Are you worried about trade frictions? Is that the top of your concern?
Well, it's quite obvious. Trade tensions, technology tensions, of course, very high on the agenda. The Middle East is very high on the agenda. But we could have a long discussion about trade tensions. But what matters probably in this room is the impact of trade tensions on monetary policy and the policy mix. Because it has a huge impact on our activities, business models all across the world. And at a time of a very low wage inflation, it's clear that the risk of a slowdown because of the trade war, and I do not make any judgment, I simply say that it has probably an impact on the policy mix and on the monetary policy, the way we see it. I simply would like to add one comment. Probably a year ago, I would have taken a different view, and you would have agreed with me, saying that we were close to a potential exit, definitively in the United States and most likely in Europe after this. At the end of last year and the beginning of this year, and even more obvious today, this is not the situation. We are not going to exit relaxed monetary policies. I shall not try to predict what's going to happen, but we shall not exit. And this is a big change in the environment we have in asset management, insurance, banking. This is a huge difference. And just to make a final remark on this, the real challenge we have from trade war to our business is to adapt what we do to this new environment. And this is the biggest challenge I think the industry has today.
You're a former central banker. Jean got us right into central banking. First, I'd like to get your thoughts on, is global trade tensions your number one concern? Is that what the board is discussing when you think about the macro environment within which you're functioning? And two, given Jean raised it, our central banks are our only hope for responding to those tensions.
Yeah. Well, I think I agree with what Jean just said. I think, trade tensions are a big concern, not not only because they tend to create retaliation, I mean, the idea that, you increase your tariffs and that everybody else stays the same because you have some sort of a domestic problem to deal with is historically wrong, I mean, there is a retaliation and that eventually leads to a sort of a sort of distracting cycle. And what I'm worried about is that now there is some sort of a spillover into the monetary field, I mean, for the reasons that Jean just mentioned, but I think if we're now talking about exchange rates, bilateral exchange rates, and you start drawing the conclusion that certain monetary policy action, which may be fully justified from a domestic point of view, are instead seen as a threat to the international trading system, which in turn requires additional retaliation or competitive devaluations. I mean, this unfortunately we have seen it, and in the past, and unfortunately trade wars lead to currency wars, and then maybe also to wars without adjectives, which is obviously something we should absolutely avoid. So I think we need to make sure that the system does not really become entangled in a sort of in a mutual distrust, and obviously there is certainly a need to strengthen the institutions of multilateral cooperation. I mean, the G20, in my view, was the forum where cooperation in this area could be sort of developed in a mutually satisfactory way. So far, the evidence is not extremely encouraging, but one has to hope that this will be the main areas of concern now are indeed trade tensions and monetary spillovers and potential for exchange rate competition.
Are you seeing these tensions, you mentioned a spillover, are you seeing it in demand for loans? Are you seeing it showing up in the real economy, from your perspective?
Not so far, but I think these are sort of new developments, and obviously eventually if there is a slowdown of the international trade, that will be reflected also in our own activity, in the trading area, in the foreign currency markets and so forth. So I think we need to sort of send warning signals, as soon as possible from this point of view.
Charlotte, you have a front row seat of what the European consumer is doing. Obviously, Visa's data on an hourly, daily basis is enormous. How do you see the European consumer? Are the trade tensions spilling over into cash registers?
I don't think it's the trade tensions specifically. So if I take country by country, in the UK, you can see almost a correlation between the decline of confidence from December onwards and our data on consumer spend. So that is continued to look weak month by month, and most recently in May. If you look across France and Germany, you see a more sustained, solid but low-level growth in domestic consumer spend. Same to some degree is true in Italy and Spain, but perhaps at a slightly lower level. The one that's the most standing out at the moment is consumer spend in the UK, to the negative.
Not a surprise there. No. Jean, you spend a lot of time in corporate boardrooms. What are your corporate clients telling you? Are they worried about the trajectory of growth globally or in Europe?
I think they tend to take a slightly different view. The corporate sector is not pessimistic. They look at the current situation as, okay, fine, it's good. Maybe not great, but good. I think in Europe, they are extremely reassured by the results of the elections to the European Parliament. You may see nuances here or there, but the trend is absolutely clear. and they invest. Now, they tend to be careful about the trade war for a different reason, which is, what about the supply chains?
Right.
How to think about the supply chains in the future. And what we begin to hear, because it will take a long time to adapt. You don't shut down a plant like this. When you have invested, you are there. But what I see is a lot of thinking about where should we produce. And in fact, the world, for them, begins to be no longer a common place where you invest, but they tend to look at the supply chains and to be more regional, to be clear. That's more what I see in the corporate sector. Now, yes, they are worried about trade war. They are maybe more worried about the war on technology, because that may have a big impact on some of them.
And given possible changes in supply chain location, might Europe benefit from that? In other words, could we see some of that production moving back to Europe? That's a common refrain in the United States. Whether it happens or not remains to be seen.
I think it's too early to tell. Whenever I go, people tell me, well, we know how to manage, will be beneficial to us. Let's wait for the decisions, Let's wait for maybe clearer views about the tariff and about the trade tensions. But potentially, it may have an impact on relocation on Europe. But let's be clear, there is a relocation in the US for obvious reasons. And probably people begin to think about locating some activities more in Asia. So the trend is regional. After this, company by company, it depends a lot about the weight of the various regions in their business, the cost, what they want to outsource. Suppliers are very important in the story. It's not only the company itself, but the people with whom they work. So what I can say humbly today, through what I see, yes, it will have an impact.
We're going to come, you mentioned technology, we're going to come to Charlotte in a minute on technology, but one of the questions from the audience, and please send your question in via the app, and they're here on the iPad, and I will fold them in as we progress. And it's an issue which we talk about frequently, and that is the negative yield curve, what it means for net interest margins, and how is monetary policy impacting your bank profitability for the both of you? How do you see monetary policy, even in the response to some of these tensions, how is it impacting your bottom line?
Well, obviously, I think we were all expecting some gradual normalization of the monetary policy that was actually predicated on the fact that we were getting close to the 2% rate of inflation, and that growth was picking up and so forth. Now, the fact that this is not a scenario that has not yet materialized, and the concerns that were expressed in Sintra recently by President Draghi, I think are well justified. So I think it's obviously a problem for the profitability of banks, but at the same time, I think we consider that, to the extent that this is necessary in order to sort of, forestall a sort of a more pronounced slowdown of economic activity, it will not be negative. And also, I must say that I share what Jean just said. Also from our own evidence, I think companies, take into account there is an increase in policy uncertainty worldwide, but at the same time they are concerned about some sort of fundamental challenges, which are in a way disconnected by the sort of the day-to-day uncertainties coming from the political side. They need to sort of embark on technological innovation. They have to, particularly in Italy, they have to internationalize their activity. They have to go and look where the global demand is, rather than relying, as they've done for many years, on domestic demand, for their own businesses. So I think to a certain extent, their demand for investment in new technology, in internationalization, in increasing their size and sort of strengthening their financial base is going on unaffected by this more uncertain climate, But of course, we shall see, whether it improves or it worsens, because that will obviously have a bigger impact. But so far, I think the situation is not very, very sort of negative.
Charlotte, this is it's called C-Suite Europe, but the C-Suite, most of the conversations I've had with our industry leaders over the past year or two has really been about technology. Tensions, global tensions on trade have been a recent discussion, but there does seem to be a global technology race. In fact, many of our member firms refer to themselves not as banks, but as technology companies, or not as insurance companies, but technology companies. Do you see a technology arms race? And two, given that there's some discussion about this so-called trade Cold War that could be a technology Cold War, are you worried about being forced to choose or not have access to certain technologies given the origin of that technology?
So I guess that the most important thing for an organization like Visa is resilience. Right? We have to be up 24/7 around the world for thousands and thousands of transactions. And that is the fundamental thing that we have to create. So in designing that at a global scale, you want to be truly global. Clearly, we have our own private cloud, and you want to be choosing the best and having the capacity to own it, manage it, control it yourself. So there's historically been a really interesting tension between how do you think about resilience while simultaneously enabling innovation. That's a juggle we've done for a long period of time. Now you've got a world where you're thinking about resilience, where you truly want to be global, but there are trends around the world that are actually in antithesis to this. So take what's happening in India,
Right.
Where they want to nationalize data and nationalize operations. That is in conflict with the kind of resilience that you want to deliver.
So you see fragmentation that undermines your capacity to have resilience globally.
Yes, and both in terms of the underlying technologies and in terms of talent. So we obviously follow the sun, and we try and choose locations where you get the best talent in the world, whether it's on cyber or whether it's on sort of more traditional resilience models. Now, not only do you have to deliver that, but you have to think about some of the fragmentation that's taking place. And I think we haven't all quite internalized that extra dimension now of fragmentation that might be more negative for the overall system.
Jean, we have a very important meeting here in Brussels over the next 48 hours. The leaders are here to discuss leadership positions, who will run the commission.
I thought the important summit was this one.
We're a lead-in, we're a warm-up for the official sector.
I agree. They have the summit, we have the conference.
Exactly. So what do you anticipate coming out of this, and as a leader of one of Europe's most important brands and banks, what would you like to see out of the next few days, but more importantly, out of this commission with respect to your institution in European banking? And I'll ask Rizzo the same question.
Well, it's a difficult question. On the first point, which is the point about what you have in mind, the appointments. Well, a decision as soon as possible. They have discussions. We know that the political landscape has changed, but not for the bad. The populist parties are not growing in the European Parliament. Elections were absolutely clear on this. So now they have to make a decision, and as quickly as possible. It's difficult for me to go any further, but that's key. Now, what can we expect from them? I may surprise you, Tim, but I think the first is about a high degree capacity to explain European policies to citizens and empathy with people. We have gone through the Gilets jaunes crisis in France, and we know why. It has a lot to do with territorial inequalities and energy transition. And the reaction was harsh. It went beyond what could have been expected. And we need to understand this. Behind this, there are many questions. I don't want to be too long. But yes, we need to address these questions. And there are questions like migration. There are a lot of questions. So I think the first expectation is maybe not in my own business as such, but there is a clear understanding that they show that they have empathy, they know how to do and answer questions, legitimate questions of the people, creating at the same time an environment favorable to growth, because we need growth and we need to fight against a lot of questions. In our industry, I think there are a few key questions. I think the first one is maybe to think in a proper way, when I say proper with us, about what is banking in the future. I do not mean a grandiose plan, this is not the case, but there are questions, and they will have questions in Europe. It's clear that what you have described as a more or longer flattish interest rate curve will have an impact, especially on banks whose business model is based on transformation. And it's clear that they will we cannot have the current situation and not have this. In front of us, we have big decisions like Basel IV or III, we call it Basel IV, the update of Basel III. We have questions like the resolution fund and and this has to be properly looked at over time in a clever way. Let's be blunt, we cannot continue to have so many banks in Europe at a time the global income of banks is decreasing. It's inevitable, there are changes. So that's a key question, which is how to manage this in a proper way, how to address various situations, how to avoid costs for the taxpayers, and so on. So that's a big challenge. That could be helped by a few decisions you know well. Capital Market Union, we can have a long discussion about Capital Market Union, but there are some low-hanging fruits which could be decided and implemented quickly. And of course, one of them, from my point of view, is securitization. We are much too slow on securitization. The level of securitization in Europe today is lower than before the crisis. At a time, one of the reasons why American banks rebound more quickly is securitization.
Yes.
So that's a key challenge. Concrete, low-hanging fruit, which should be decided rather quickly. And that would be a big help for the restructuring of some banks in Europe. So you can take a few measures like this, and that would be, we could move quickly, and they could move quickly.
Professor, from Milan, what would you like to see out of Brussels over the next year that might help your business?
Well, seen from the point of view of a pan-European bank as we are, I think we certainly would like to see the completion of the banking union, and also a strong push towards the capital markets union of the kind that I think would allow us to provide sort of, longer-term financing to SMEs at sort of a more convenient terms and a more convenient price than at present. I think, the European SMEs, in the four big countries, are the backbone of our economies, and I think we need to be able to support through the capital market union their access to the capital market. Right. They are overly reliant on bank credit, and but I think the banking system can help them to move towards sort of a different composition of their financial situation, and I think that would certainly be But I think, you know, from a more general point of view, I think, you know, the new institutions that are going to be created have to rebuild trust in the project of European economic and monetary and also political union. I think we sometimes, I mean, outsiders look at the European Union as some sort of an international organization. That is not true. I mean, this is a sort of a law-based, democratic union of different countries, which are still having, you know, different political institutions and so forth. But you know, we have a single currency, we have a democratically elected parliament, we have a European Court of Justice, which can reverse the judgment or the measures taken by the executive arm of the union. So I think there is a lot more than just a forum for exchanging views. And I think the idea that eventually within this framework, what works better are the areas in which eventually there is a delegation of power, you know, to a European institution, which then can perform their tasks, you know, for the benefit of the union as a whole. I think the fact that we have, you know, as a former central banker, you know, we fought for the creation of the European Central Bank. And people said, but why are you doing that? You're going to lose power and credibility. But actually, we gained power and credibility at the European level. And I think the fact that the euro is now a widely recognized international currency, which I think should be probably play a more assertive role on the global monetary scene than it has done until now, for reasons that are geopolitical in a way, but also fundamentally also economic and commercial, if you want. So I think the idea that you know, the new European legislature should really try to return to the sort of a more sort of accepted role for the federal, quote-unquote, areas in which Europe can play an important role. I mean, the monetary area, the trade area, the competition area, so forth. These are areas where, you know, Europe yields you know, a positive power. Other areas, you know, where there is disagreement, there are sort of compromises or basically lack of decisions because of different, and there are a number of areas, you know, which even in our areas, you know, I think financial fragmentation is a real problem, you know, and I was discussing today with people, my friends in the Commission, and about the home host issue, and I said, you know, if the host is not cooperating, we go home. You know, that's the way in which I can sort of, you know, crudely put the issue. You know, but
well, you're right. When we had the police.
May I read on what Fabrizio says, because I fully share Fabrizio's views. And it leads to what could be a missed opportunity and maybe could be an opportunity. The missed opportunity is not to move forward on banking union and to give a preference to the solo approach. I think in the room, everybody understands what I mean. That's key. We are in the middle of the river. We can cross the river safely over the next years, quietly, and bring a lot of value. If we begin to retrench and think that fragmentation is better than the common approach, then we go wrong. But there is an opportunity. And I think we should look at it carefully, and it will be driven by the political leaders. It is the green agenda. And our industry, banking, asset management, insurance, should pay a lot of attention to this. We shall be asked to do more. We can do more. And I think the green agenda, for obvious political reasons, you know, when you look at the European elections, young people have decided to go and vote to the European Parliament election. And why? Mainly because of the green agenda. This is the first time this is so powerful. And we should not underestimate it. We have a big role to play, and the pressure will be on us, definitively in Europe. It has a lot. It's about climate change. It's about sustainability. It's about social inclusion. There are a lot of agendas, but that's absolutely key. And if there is something we can do in the context of the IAF,
Indeed.
is to move from what may remain too much as an emotional agenda to a much more professional agenda. And professional agenda on that story will be measurement. This is not very glamorous, Tim, but this is our business. And measuring impact over time, pooling data, working with fintech, using their cleverness in innovation to monitor the green impact over time and to be accountable, because at the end of the day, that story will be about accountability. I don't know how it is in insurance or other industries. In banking, the FSB is pushing very hard on us to move to the green agenda. So that's an opportunity, but that's a big task, not easy. We shall compete among us, but within the IAF, I think it would be good we have a very professional discussion about what it means.
To that point, we have a workshop tomorrow in Amsterdam on this very issue. We're working on the measurement. Jean-Pierre, when I saw him in Milan a few weeks ago, challenged us to this very task, which is how do we measure the greening of the brown, and how do we actually account for the progress the industry is making. So we start tomorrow with technicians, and it's a central part of our work stream going forward. So I agree with you. It's important to us.
I don't want to make any advertisement. I don't know if they are there, but when you see that one of the most important and first non-financial rating agency, Vigeo, has been partially bought by Moody's, you see what's going to happen, which is professionalism, measurement, professional. And behind this, there are a lot of questions, norms, standards, you know.
Taxonomy, what is green?
I welcome you begin with the tulips. It's good.
Indeed. The green agenda is an important agenda for us, and we've had many of these discussions. We just had a workshop yesterday in London with our working group on greening the financial system. I was just at the Bank of England on Tuesday meeting with the Secretariat for the Network for Greening the Financial System. It's something that's about to swallow our organization whole. We're spending so much time on it, but it is an important part of what we're doing going forward. The other issue we're spending a lot of time on, we had a digital event yesterday in Frankfurt, the digital agenda. I got numerous questions here about Libra, just announced this week. It's a Facebook-led organization. Visa is a partner among other partners. Maybe you could just describe what it is and maybe hear how the banks think about it as a potential competitor or a partner.
Sure. Let me turn a little bit to the digital first, because the thing that you said, which I believe, whether you're a policymaker or whether you're a commercial organization, is we need to be much, much clearer on the needs, on people's needs that are permanent and not transient. And so thinking about people's needs to be in control of their financial life and the decisions they make about green. So for example, we can help consumers determine when they shop, which is a positive green shop and which is not. Helping them to feel the trust and security in whatever it is they're using. And I'll come to that with Libra. And helping the whole thing to be somewhat simple. Our lives are complicated. People's lives are complicated. It's one of the things they're raising. We need to be thinking about that. So I start always with, what is it that consumers really want longer term in a very fast changing world that can feel very uncertain? When it comes to Libra, you know, the Facebook announcement came out over the last couple of days. And yes, there's a big association of academic institutions, of nonprofits, of companies, and including ourselves. It's an interesting development. There's some interesting thinking behind it that takes you from kind of crypto asset world potentially to a more stable cryptocurrency. For us, it's interesting from the perspective of the 1.7 billion unbanked people, largely outside of this region, not entirely, but largely, because that's where the challenges of the physical currencies and trading outside of their own borders, I think, are most acute. It's at a really early stage, and I think our view was a seat at the table and a ability to bring a perspective on how do you create trust, security, how do you even think about settlement or acceptance is a better place to be. But I think it's really too early to say much more than that.
Jean, we've had numerous conversations in our board discussions on the competition posed by internet platform companies, Alibaba, Facebook, Google, Amazon. Is this a manifestation of that concern that we have, or is it a potential partner for you?
Well, I think it's much too early to say. I've read the announcement, but there are many unknown points or unanswered questions yet. What is the business we do at the end of the day? The first one is to fully implement regulations. Brief on that point, but we mean terrorism, traffic, money laundering, okay? And this is serious, okay? The second point is the trust of the client. What about data? And I think clients will wish to know what's happening to their data. And of course, the third point is the link, the border between this world and the real world. Because at the final stage, the shopkeeper needs sterling, euro, dollar. So you may have stones to pay, but then the stone must have a value to pay local taxes and suppliers. So I will not go too far, but there are a lot of questions. And our industry is built on trust. Now, these type of ideas, and that's why we look at them carefully, and to a large extent, I welcome, because it's about competition. It means that we need to deliver a good service at a fair price, and this is the challenge we have. So the best answer we can have to this type is to be good, and to be good on all the points. Hopefully with you, not against you, but you will have to choose. And we have simply to manage an efficient payment system, cross-border, and at a fair cost, and a speedy one, because some transaction may take too much time, but for various reasons. So what I mean, I think this announcement is an incentive for banks to do even better.
Given we're out of time, I'm going to let that be the final word. It's a nice way to conclude this conversation. I wish we had more time. I have pages of more questions, but we're going to keep this train moving on time. Thank you so much. I greatly appreciate your time here today. Ladies and gentlemen, please give them a round of applause.